Start.
Good morning.
Good morning, ma'am.
So today we are going to explain about sources of business finance, right? So let us discuss about how the fund is available for our business or for one organization to start up or existing business also needed, right? So how the sources is available to the organization or the business, right? Let me discuss about where are the sources of business available, right? And so when we start up or the existing business, like without fund it is meaningless, right? So business finance is known as the lifeblood of a business. Business finance is known as the lifeblood of a business, right? And so if we check why the fund, why the finance for business, right? So the finance for business is for making growth, survival and profit, right? And using this profit, like we can grow our business, or we can introduce a variety of product, and we can introduce our branches in any other places nearby local area or in any other state or inside the India, or even export, right? So of course here there is a need of finance, right? So what are the role of business in an organization? So it is using for survival, profit and growth, and also it necessary for promotion and organization. Promotion and organizations means like we have to open up a new branch in other area. That is what known as the promotion of an organization, okay? And it ensures orderly functioning of an organization. Orderly functioning of an organization means finance is needed for day-to-day activities of the business, right? And so day-to-day activities means what?
Day-to-day activities, salary.
Paying wages,
Yeah.
then
Paying wages, taxes.
taxes, then day-to-day activities means working capital requirements, okay? Like a stock we needed, that is one of the current asset, right? And current liability like bills payable. When we credit purchases, we need to pay the bills, right? That is credit liability, right? So these are all will happen, like we need raw material for our production, got it? And day to day we will sell our product to other outlets or other organization, right? So these are the like day-to-day activities of the business, got it? And so in this day-to-day activities of business, you have seen some examples, right? So for this finance is needed. Now what type of finance we can use? What type of finance we can use for meeting day-to-day activities? Do you have any idea?
Short term.
Short term. So short term, and that capital is known as
Working capital.
very good, working capital requirement. So what is meant by working capital?
The amount which is reserved for the day-to-day operations.
That is known as working capital. So what will be fixed capital then?
For the long-term
Assets like machinery, land.
So to purchase long-term assets, right? Like a machinery. So we need both the capital, fixed capital and as well as working capital. Fixed capital means like investing money into assets, right? Fixed asset which we can use for long time. That is fixed assets, fixed capital requirement. Working capital requirement means day-to-day activities business, right? And next one is like finance is the backbone of the business, and it brings the stability. It gives modernization and expansion. In then objectives of wealth maximization, we need finance for wealth maximization also. Okay. Now let us check what are the types of finance. Okay. So what are the types of finance? There are three ways we can take. What are the three ways we can take?
On the basis of period, on the basis of ownership, on the basis of source of generation.
Okay, on the basis of period, on the basis of ownership and on generation basis. In this three basis, we can gather or pool the money. Got it? For a business. Got it? And if we have seen the first one, periodic basis, then long term. What are the three types of finance in the periodic basis?
Long term, medium term, short term.
Right. And do you have any idea about what are the long term available finance?
Long-term sources fulfill the financial requirements of an enterprise for a period exceeding 5 years, which include sources such as shares, debentures, long-term borrowings, and loans from financial institutions.
Which will be available for long time, right? Bank loan, debentures, right? These kinds of funds will be helpful for long time, like fixed capital requirements. This will be helpful for fixed capital requirements, right? And medium term.
The funds which are required for a period of more than 1 year but less than 5 years are medium-term sources. These sources include borrowing from commercial banks, public deposits, etc.
Okay, so this medium term loans, like it will be available, like 3 to 5 years is available. Bank loans, commercial bank loans will be available, and this is also we can use this medium term loan is also we can use if we have one of the big organization to open up a new branch, a small branch, we can use the medium term, right? And what is the short term finance then?
Short-term funds are those which are required for a period not exceeding more than 1 year, like trade credit loans from commercial banks and commercial papers. They provide funds for short duration.
Okay. So now we have seen that the long term, medium term and short term, right? Periodic basis. Got it? And